This is Kali Persall, editor of Institutional Investing in Infrastructure. And joining me today is William Smales, a partner and CIO at Morrison, to talk about the global surge in institutional interest in infrastructure. So, Will, can you just kick us off before we start with a brief introduction of yourself?
Hi, I'm Will Smales, so the Chief Investment Officer at Morrison. So I look after the investment activity across our firm. I sit on our investment committee and management team. Morrison is a global mid-market infrastructure specialist. So infrastructure is all we do, and we've been doing it for a very long time. So over 35 years investing in infrastructure.
That's great. Thanks so much for coming back. I know we last met in 2023 for a video interview where we discussed growing interest in institutional investors in emerging infrastructure sectors. And that was due to the asset class evolving and maturing. So obviously, a lot has happened since then. What are you seeing that's driving the surge in institutional interest in infrastructure globally in 2025?
I think it's two things. First and foremost, it's returns, risk-adjusted returns over the long term. If we look over infrastructure over the decades, certainly Morrison's been investing, you can see that the asset class has really done its job for investors by delivering stable returns over the period and really fulfilling its role in the portfolio. The second point that's becoming increasingly important to institutional investors is actually having a connection with the assets and companies they're invested in. And for infrastructure, those assets and companies deliver essential services to communities and play a really important role. And that's important for institutional investors to know that their money is being invested for a great return, but also for the benefit of communities and society overall.
Absolutely. So, sort of given this maturation of the asset class, do you see infrastructure becoming a core allocation for institutions looking to diversify their portfolios?
I think infrastructure is critical in any unlisted exposure for an institution because it plays a different role to property, private equity, and venture capital. Importantly, it provides great downside protection in periods of volatility. We're in a period of volatility now, and it's infrastructure's moment to shine. But also it provides very long duration returns because infrastructure is providing the essential services, and that's really important for investors as well. You know, where is pensioners' money or institutional money going? And if you know it's going into businesses that support communities and support prosperity over the long term, that's also really important.
So, how are institutional investors balancing risk when allocating to the asset class today?
Great thing about infrastructure is as the asset class has matured, there are now a range of options for institutional investors within infrastructure. So you can choose to have a very low risk return outlook, core infrastructure investments, which typically have a high component of yield, or you can look to try and get exposure to emerging global themes like digitization, but in a slightly higher risk return outlook, perhaps with more reinvestment and less yield. So now, investors have real choice about how they balance their portfolio overall, and they can tilt or pivot to whichever area of infrastructure they find most attractive for their portfolio construction.
Speaking from your personal experience, how are longtime infrastructure investors like Morrison staying on sort of the leading edge, giving the rising interest in the asset class?
Yeah, one of the keys of reading the trends in infrastructure is making sure you've got a group of people around you that really understand the industries that you're investing in. So, we'd encourage everyone to make sure that they don't compromise on having that deep sector expertise on staff so that those folks can point you in the right directions and where the trends are heading. It's also really important to be curious, like really curious. Ask yourself the questions of what's coming next and not be afraid of some of the technological shifts that are heading our way. Technology does impact infrastructure over the long term. So you need to understand those changes and see how potentially it could even be a benefit for the infrastructure assets that you own. Our first data center investment was nearly 10 years ago now. But when we made that first data center investment, actually, we spent many years looking and trying to ensure that we had identified the infrastructure characteristics. And it was only when we found an opportunity with long-term inflation-linked contracts were we happy to invest in data centers as infrastructure.
So, just given what we've seen, recently, how do you expect investor appetite in the sector to continue to evolve over, say, the next 3 to 5 years?
Well, it's a really interesting time to be an investor. And actually, it's infrastructure's moment to shine. Infrastructure in a volatile market should perform really well. It should provide consistent, stable returns and should really protect investors on the downside if you have a period of subdued economic activity like a recessionary period. So really, investors right now should be valuing the role it's playing in their portfolio and therefore recognizing why it's important to keep allocating to the sector going forward. When there's periods of instability, there's always opportunity. So infrastructure investors who've been in the market a long time, understand the areas they want to invest, actually can use these moments to put their foot on, pick up some assets that maybe they've been tracking for a long time, but either the vendor wasn't ready to sell or the opportunity wasn't there to meet the market in terms of price. This moment in the market presents a real opportunity for investors.